It's 9:40 a.m. in London when I'm doing this market update. You're most welcome to write to me in the chat box. It's always nice to see a good morning. And if you have any questions about the markets, we'll address them as well. So it looks like we are live now, so it should be visible on your end in any minute now. You can always just scroll backwards if you arrive late as well. Okay, let's begin. And what we're going to look at is the euro and, of course, talk a bit about what happened yesterday. So what happened yesterday is that the US government decided to delay the tariffs that would kick in on September 1st. And there's not going to be any tariffs on things like mobile phones, computer monitors, certain toys, and certain clothing, which makes perfect sense. As I talked about it before, it's quite interesting to see the timing of Donald Trump's action to push so hard against the Chinese just ahead of Christmas. And Christmas was also one of the reasons why they decided to delay tariffs on some of these important goods. Now, there's still going to be some tariffs kicking in on September 1st, but they need to, I think they're going to publish, if you go to the homepage of the US government, not the US government, but sort of the US customs government page, you'll see that they put a statement out that they need to put a list on exactly, or update the list on what's going to be tariffed or not. So that obviously sent stock market soaring yesterday. As you can see, the market went straight up. Gold prices, they went all the way up and then plummeted on the news. And the markets just start trying to figure out what's going to happen next. These sort of tweets, these sort of comments, when I started trading, they would come less often. And trading was just easier back then. And then fortunately, it is what it is, and it will probably continue for longer. If anything, sort of what has worked is hold positions for forever, for a long time. There definitely stuff that has been working, but if you're trying to optimize things in the short term, like we're trying to do here, it's definitely a difficult year, I would say. And as a trader, our responsibility is just to make sure that we don't get into too much trouble and sort of lose too much money over it. That's the only thing we can do. It's a bit like winter. We just need to wait for that to pass, and then comes spring. As for the euro versus the USD, as you know, the volatility here is down at 1985 lows. So that's 34-year lows here in this market, 33-year lows. And then what we're looking at here is that the market is obviously going lower, maybe around this upper green line you might short. Obviously would have been great if I sometime in October last year would have pulled this up, because then would have worked great, and it so far has been working rather great. As you can see, repels nicely from these levels. Is it gonna hold forever? Definitely not, but for now at least it seems to be working. So people are selling around, say, 111.80, sorry, 112.50 or so. And then if we go down to the line, we should be going down to 111, 111.11. So maybe you can do something like that. If this doesn't hold, it might go up to the red line. And I think in general, as you can clearly see, it's drifting lower. So in general, as long as you trade below this high here, we should be drifting lower, not higher. GBP versus the USD is going up a bit, so receiving a bit of support. I personally think on the back of those comments we saw yesterday, we should see the dollar being under a bit of pressure, really, and not pressure, but the risk off, like stock markets maybe stabilizing a bit further, gold going down, maybe the dollar softening. I mean, it definitely softened a bit against the dollar, against the Japanese yen. And I think here as well, I mean, it moved lower 1-2 times. It might do that a third time. It is definitely possible to short sell here in this little area, really. I lifted the trend finding notice level up here. I don't trust this 100%, but it's definitely a downtrend. So let's just stick with that until proven otherwise. Here's the dollar versus the Japanese yen. As you can see, it went all the way up to 107.10 and went all the way up and probably move back down to support again, I think. What can I say next? Well, crude oil prices are in the middle, at least West Texas. Crude oil had a massive rally yesterday, Brent as well, because the idea is that delaying these tariffs gives more time to negotiate a trade deal that should way less on the markets. And what you're looking at here is just crude oil prices trading sideways, and at least West Texas looks to trade sideways for longer, and that was a bullish breakout. This is bearish breakdown, and that's what we can do. Gold. All right, so I hope you didn't get caught up yesterday. So I did do a little update on it. So the idea was you could potentially, obviously, look to buy here. The market was there already here, and then it plummeted on these news. And obviously, so it's good to see what happens when the market reaches your levels. And this again, you can't really predict that, not with high certainty at least. The ton of people that are gonna tell you, "Oh, I know what's going on in the mind of Donald Trump," but no one really knows, right? I mean, not even Boris Johnson, right? So the Americans yesterday said that they're looking to negotiate some quick deals, and then when they asked Boris Johnson about it, he said that all of that is important. Actually, I'm not quoting here because I don't remember exactly what he said, but he in essence said, "Yeah, that's really great, that's really nice, but now we need to create a deal with sort of our friends on the other side of the channel." And it was more colorful than the way I said it, in a good way. So, wouldn't it be more prudent of him and say, "Yeah, Americans, look, we're gonna do a great deal with them." That's what I would have guessed at least, but he sort of focused on on the EU. So what's gonna happen next here then? Well, I mean, I think realistically, I think everybody looking at this can say the market has rallied from this low with about 9%, 9.5%. And from this level down here, the market rallied with about 11. And then from the levels down here, the market is up with was up with about 21%. But not only that, we just went straight up with no sort of pullback. So I personally think that we'll probably trade a little bit lower, and the market might actually try to build the base at lower levels. Much like the setup up here, just keep an eye on price. Just because we go down here doesn't mean that we should be sort of jumping on the first opportunity, especially if it comes down. If it goes down and then gets that aggressive push to the downside, I always try to check what actually just happened. Is there any reason for what happened? And it doesn't make sense that the market can continue to decline. Like yesterday, I got a question about Brent crude oil. So crude oil looks something like this. And the idea was to be bearish from this level. But clearly, when you read the news about what just happened, you don't jump short immediately. You wait for the move to end, which usually happens by the end of the day, because that's when everybody sort of gets excited, all the excitement wears off. And then you need to remember that you still have the Asian players that are sleeping in the afternoon here, our afternoon, their night, of course. So when they wake up, they're gonna be in a situation to make a decision and say, "Oh, look how much crude moved up. I need to take a decision. Do I want to keep it or do I not want to keep it?" Clearly now in Brent crude oil, the market went up and then moved down. So clearly they want to weather this out. And technically we're still dealing with a downtrend here. So you can now sort of say, okay, let's consider to short. Because you have your fibs and everything. And unfortunately, no one really knows. Is the economy going to slow down so much in the world that is going to cause this to go lower? Or is the trade deal and optimism around that going to boost things? No one really knows. I'm sorry, but no one really knows. You have a view in the long term. And what's the traditional view then? Or what do I think? What normally the Federal Reserve needs to cut more than it projected. And normally when they finally start to cut interest rates, if you look at the yield curve and things like that, the likelihood of a recession is very high. So if we do have a recession, should crude be at $60 a barrel? Or should it be slightly lower? Maybe around 45. Probably around 45, guys. That's what I would argue. So I'm guessing that from that long-term perspective, we probably should trade lower here in Brent crude. And that's the only thing we can do. Unless you have a magic crystal ball at home, or like a quant locked up in a basement that can, or in an office for that matter, that can help you to figure out what's going to happen next. But even if you have a quant, doesn't necessarily mean that they're going to be able to forecast things efficiently. Looking forward here, 13.19. Again, that's the stop on the overall trend in crude and gold, and maybe down here. Alternatively, if it stays long enough here, then maybe this can become the low, but we don't know that just yet. German DAX is under pressure, as you can see. So it bounced nicely from support yesterday, moved all the way up, and the German economy is not doing really good. I think there's some data coming out just recently. Let's click on this. So Europe stocks trade lower as German economy contracts. So we know that the SEV index was poor. I wrote about that yesterday. So we have that, and I think we have some data coming out today that apparently the German economy shrank by 0.1% in the second quarter according to data. Unfortunately, this writer did not write if it was quarterly data, but I'm guessing it's quarterly data. So German, there we go, GDP. This is the annual GDP. Annual GDP 0.4. See if we can find, this should be the quarterly one. So this, I guess, is the latest reading. So -1 for the second quarter. And you can see that the German economy, the growth here has been very patchy since summer last year. And the annual growth rate, which is what economists prefer looking at, you can see how it was growing nicely on a year-on-year basis. Let's see if I can reload this. But now it's at 0.4. So that's not really good. On the other hand, it's not like a massive decline either. Like a contraction of 0.1 is not too much. If we take a look at the labor market, the unemployment rate in Germany is at 3.1. Obviously, the unemployment rate moves after the fact, but employment rate in Germany here looks like you need to go back into the 80s or something to find it at similar levels. So you can have negative or no increases, but that doesn't necessarily mean that you have a recession. I mean, everybody has been in a situation where they don't get a salary increase every year, right? Same thing here. Some people haven't had salary increases for a year. Some people even have salary cuts. Doesn't mean that you're in a recession, you need to move out of your home. So we'll see what happens, but again, the numbers here are not looking too great. I guess that's spooking a bit of investors. But again, as I just said, if you don't get a salary increase for a year or so, it's not gonna force you to take your kids out of school, right? So I'm thinking this is probably gonna trade sideways for longer. Again, some people say in the long run it's gonna get worse. Okay, so if that's the case, what should we be doing then? Well, let's buy gold then maybe. But when are we gonna buy gold? Well, after that correction, I think will be prudent. So if anything, you'll probably trade sideways for longer, and now remain bullish above 11,447. Because again, you have people saying, okay, maybe the situation in Germany is not that good now, but because they're done putting those tariffs on, it's gonna be less bad than we thought. S&P, I think better off here. Just understand that this is gonna trade sideways for longer. Right now, you got bad data on one end, central banks cutting interest rates, and then you have trade wars, and the price is just getting squeezed here. People don't really know exactly what to do. Rush reward ratios are good for long positions down here and short positions up here. That's all we have right now. This is no man's land in the middle. And I think that is it. I think I covered all of the main markets. If you now have any questions, I'll take those. As well, if you don't check out the website, make sure you do. So we got Nikos from Greece. Good morning, Alex. Please check out PoundCat. Cool. Let's check out PoundCat. Okay, so this is PoundCat. Let me see. I remember pound CAD because we looked at it. I did an article about it last week. Yeah, so the trend, as you can see, is bearish. The trend is bearish. It's trading lower and lower highs. It's been bearish for quite some time. The market is just above this important 2017 high, and then you got the 2017 low, 2016 low. So these are important levels, and obviously if the market manages to sort of pull itself out of here, you might have a correction up to 165 eventually. So the question is, what's going to trigger that then? Well, a deal, right? We need a deal for the UK, and until that happens, people are going to be very, very reluctant to buy pounds. So is a hard Brexit priced in to some extent? Is the market prepared for it? I don't think so. Some people maybe are, but I don't think the market is genuinely not. The economy generally is not prepared for it. So I think the default outlook is gonna be bearish. The question is from which levels. So if you look at this today, the market slid below support, but they didn't really gain too much traction. And we already looked at the pound versus the USD is rather short-term bullish. So here is more about tactics, like where do we want to sell? Would I sell right now where we are now? No, I have a suspicion that this market could go at least up to the 50% level, and really I guess the optimal level would be, for me, would be around the 60 level. So around, say, the high here, that would be my optimal, and then like that. Can you buy and sort of hope for this to bottom out? Yes, you can. You can buy if you want to put a stop loss below the low, but you see, most reversals, when they happen, they're messy. So I would suggest, and that's what I always do, just wait for the trend to turn to your favor. And you need to see a break to the August 7th high. And you can, if you wanted to. I know a guy that used to say, well, if you wait for the reversal, the risk reward ratio is not going to be good. But I can tell you right now that I am trading with real money, and he's not, and it's been like that for years. Much more popular than me in his market, but survival is important when you come to this, and it will be amazing to buy at the low and keep it there. As you know, we have a deal, whatnot, we go upwards. The problem is if you always try to go buy the lows, then that's the reason why people lose money 70% of the time. They try to buy at these lows, and sometimes they're lucky, but 70% of the time I would say they get stopped out. So I would not suggest for anyone to buy any lows here. If you really want to bet on the UK, you need to be more clever than just buying the pound, I think. And then again, I think we can, again, up here I think people are going to sell, if anything. And remember, the market likes to take out important level. It loves to trigger stop loss orders. So yeah, I'm quite confident to say it will probably try to trade below here. If it doesn't, well, that's when we have the stop loss, right? Okay, we don't have any more questions today, so we're gonna wrap things up. Guys, thanks so much for joining me. Nicholas, thanks so much for your question. Let me actually see here if there's any more question. Yeah, so everything is available here. Okay, guys, take it easy out there. Don't trade with too much leverage. Take it really, really cool. If you have issues with the markets, remember volatility is 1985-year lows in the euros. Like, even if you wanted to, the market is not going anywhere fast. So you just need to understand that. Don't forget to hit that like button, and don't forget to subscribe. You guys are doing it really, really good. Let me show you how that's done. So I'm just gonna go to the BBC Radio 1 today. You click on subscribe like that, and then you click on the bell button. That means, as it says here, stop receiving notifications for every new video. Now you can, there's a bunch of settings. You can get an email, you can get that little bell button. The bell button is the best. You get this if you're subscribing. And you can modify things. So if you do start to get a lot of emails and stuff and you don't like that, then you can always just disable that. as well. We are on Twitter and Instagram. It's really important, guys. Really important. If you like it, support it, because the numbers don't lie. Data doesn't lie. So if you like the stuff, it's really important you support us by subscribing, by liking, resharing. Uh, so that's the link to Telegram, and this is the link for Twitter. It's really, really important, guys. Okay, so you get a question by 8644201. Is that your phone number? Hi, Alex. What's on your cheek? This is my microphone. Can you talk briefly about the ISM indicator? How do you gauge better or worse? Yeah, sure. Let's take a look. Let's Google for it. So the way it works is the ISM indicator in a book by, or an interview, I think, with Alan Greenspan. Alan Greenspan was the predecessor to Ben Bernanke, which was the predecessor of Janet Yellen. And Ben Bernanke was around when I looked at the markets more than 10 years ago. And he said that if he would be stranded on an island, the ISM would be what he would be looking at. So this one should be it. This is not it. ISM. ISM markets, maybe. GP. Let's do like that. Good recommendation that they taught me in university. Always go to the source. The source is always best. I always try to do that. Because if you don't go to the source, to begin with, you go to the source, you look at the numbers yourself. Because if you go via Reuters, Bloomberg, me, or anybody else, they all have their own little view on the world. And they all gonna put their own little color to it. So this is the ISM indicator. This is the aggregate, which is made up about all these different components. So you have new orders, production, employment, supplier delivers, inventories. So what they ask is very straightforward. They ask them, new orders, more, less, or unchanged. Just three options. Not about the magnitude. Just three options, which is great. That's how many surveys should be. Not how they feel or not feel, rather up, down, unchanged. So you can see here, and then they ask a bunch of other questions as well, like the prices you're giving to people, are they higher or lower, same thing. And then they create this thing, and I should be able to open a PDF out of this somewhere. In the old days, they used to have just a PDF on the top. Here we go. So here we go. Back at Trading Economics. You can see how the indicators has been going down and down. The last reading was for, according to this one, 45. No, that's for prices. 51.2. And, you know, below 50 indicates a contraction in the manufacturing sector. And there are some clever people that I follow. See if I can find them. Nordia, let's see these guys. This one here. This is Michael. I'll send you the link to his Twitter. Not affiliated by any means. He works for Nordea Bank. Nordea Bank is one of the biggest banks in Sweden, and he is an economist over there, and he produces some quite good charts. um, like leading charts. So let's see if we can find one, because he does comment on the ISM. So he does is that he looks a lot at leading indicators of the ISM to get an idea what's going to happen. And he's done this one, which is the GDP. I know it's not the ISM, it's GDP. So he has this leading economic indicator, the Nordea GDP model. You can see that US GDP is still around these highs, but what his model is telling us that the economy is going to slow down to about 1%, which is not recession levels, by the way. Recession is down here somewhere. So maybe stocks shouldn't be this elevated. Let's see now if we can find some ISM indicator. July 1st is a bit old. So according to his estimate, or this model here, the ISM on a year-on-year still has a bit more weakness going forward, but then that eventually can move up. Now this is manufacturing year-on-year, so it's not the actual points. I think if it would swing up, having difficulty to understand what is what here, but definitely slightly more weakness. And the markets are, this is another little chart, ISM manufacturing cyclical defensives. Here actually should stabilize, I guess. It's a bit difficult, even economists, or actually economists, looking at different charts, looking at different things, will yield different results, unfortunately. So there's not a clear answer to this. There's not, unfortunately. But realistically, is the ISM gonna bounce, shoot up massively? Probably not. What's more likely? Well, looking at some of these charts, it's more likely that the ISM probably is gonna trade below 50. What's gonna happen when the ISM trades below 50? Well, everybody's gonna get a bit of panic. Manufacturing sector under fire. Are stocks gonna go up or down from here? Realistically, they go down from here in the longer run. That's what I would argue, especially if the numbers start to come down below 50. Okay, so I would argue that probably more bearish than dovish. And then what's the other way around here? What could influence things the other way around? If suddenly the numbers, if the numbers, for example, start to improve aggressively, that will be something that could potentially lift. And sometimes that's just what happens, Sometimes when you have sideways, like people are not sure about the economy, the market just trades sideways. And then the market sort of waits up for the economy to catch up. And when the economy starts to look good again, that's when the market starts rallying. And more likely, that's what we're going to see going forward. Okay, I think we're going to wrap things up. Guys, thanks so much for joining me. I hope that helped a little bit. I wasn't really prepared for that question. Okay, guys, have a beautiful day. And I'll see you guys tomorrow, same time. Bye.